Good morning. How's everybody doing today? I'm Connie Foote with Foote Title Group, where we protect your home ownership. Welcome to Coffee with Connie, where we try to share with you all types of information that may affect real estate. So whether you're purchasing a home, you're selling a home, you are a realtor that is working with some customers that are selling or buying a home, or if you're a mortgage company or a mortgage lender and you are working with someone who is buying or selling a home, we want to try to give you some information about not only home closings, but also real estate and also mortgages, some things that we've come across, 30 years plus worth of experience that we want to try to share some experiences that we've seen and had experience with. Hey there, Pam. Good morning. So today, well, let me start by saying I have a lot of different things that we've experienced that we try to share with you, but I also try to share with you experiences that are happening real time. So when you guys come across things that you have questions about, please ask, because it helps me see things that maybe people have questions about in this environment that maybe I just don't know, that they don't understand. So if somebody asks you a question about that, share their information with me or have them reach out to me. Or if you have a question about something that we're not talking about, please share and reach out to me. So, hey there, Karen, how are you this morning? So this morning I wanted to talk about, as I said, things that come up. We've had this experience, and the funny thing is, once it happened in our office, so the insurance companies that we write for are now sending bulletins out because they want to share with all of the title companies, hey, this is something we're seeing a lot of. And so it was kind of coincidental that it happened to us and then turned around, and a lot of other people are having the same, a lot of other closing companies are having that same experience. So if you you're a seller or you're an owner, you're a homeowner, and you have a mortgage on your home, and you decided to participate in one of the homeowner relief programs because when the economy was in a state of flux, maybe you had a situation where you were unable to make your mortgage payments, and so the mortgage company was willing to work with you on a program. This particular these two programs, the HAMP and the HARP programs, were the homeowner relief programs, actually went through, if you had an FHA mortgage, the Department of Housing and Urban Development. So that's called HUD. So we're going to talk about HUD for a minute. Or in this discussion, we're going to talk about HUD. But if you participated in one of those homeowner relief programs, they were great programs to help subsidize a situation that was really bad with what was happening with the economy. So absolutely fantastic that the government came in and made these kind of programs. But what I want you to be aware of, and what we're starting to see now, is those people that participated in those programs are now looking at selling their property. And what's happening is when the mortgage company agreed to do this workout with you and they went through HUD, and HUD said, okay, we've investigated all of your finances and all of the situation, and yeah, we want to help you out. So we're going to subsidize some of that program and get that off of your plate and make sure that you don't have to worry about being behind in that mortgage. Because a lot of times what happened, and we saw a lot of this, and we participated in helping set up some of these, was that when someone was behind in their mortgage, HUD agreed to take a second note on that mortgage and not require the seller to make payments on that, so they could catch up whatever they were behind. And typically that's what happened, is they came in and said, all right, you're behind all this, this loan, these interest and penalties, and we're going to set that aside and let you just make your mortgage payment going forward. Maybe something changed in your personal situation that allowed you to be able to catch up. And so to take that off of your plate, to set that aside. But what they did is they created these second mortgages and recorded that against your property. Now, they've never required you to make a mortgage payment on it. The unusual thing is the new second mortgage actually has the exact same loan number, the exact same FHA case number, and so in your eyes, it looks like, and in a lot of the closing companies' eyes, it looked like that the two mortgages, when the loan was being paid off, that payoff that we were given was actually going to be paying off that second mortgage as well. And that's absolutely not true. What we're finding is that there is a company called Novad who actually services or takes care of these mortgages for HUD. And so when we found out, we saw the two mortgages on the title of the property, and we contacted the seller and they said, well, this particular seller we were working with didn't even realize they had a second mortgage. And so then when we got the information from them, they didn't realize they actually had a second mortgage because they've never made payments on a second mortgage. So they've just been making payments on that original first mortgage. They knew they had a workout situation, but they didn't realize it created another mortgage on their property. So we were able to do some investigation and find this Novad company that's doing this servicing and talk with them. And yes, it's an actual second mortgage that does require a separate second payoff. And in this particular case, it was $24,000. And the problem is the seller didn't have that much money in the deal. Partly they negotiated a sale of their home based on what they thought they owed on the home, and they owed more. So it is a second lien. It is a loan that needs to be paid. HUD is expecting to be paid off. So when these loans when the seller goes to closing, HUD is looking for a loan payoff at that point. When they made the arrangements, they didn't require any payments, and they tied it right to the first mortgage because that was what they were working with, which makes it really confusing for a lot of us in the real estate industry and for the seller, because the seller assumes that whatever happened, this government buyout situation, that they didn't have to repay this loan. So now you've got a situation where they've got a loan that has to be repaid. And let's say the company that did the closing, God bless them, if they thought that one payoff that they were given from that first mortgage actually paid off both of those loans, and they closed on one of those, now we got a bigger problem because that insurance that they provide to the new buyer protecting the home ownership is going to have to kick in, and there's going to be some things that need to be worked out for the new buyer. So if you're selling your property and any of these terms ring a bell, if you had a buyout situation, if you got behind in your mortgage payments because something happened in your situation and you couldn't sell the house or you couldn't refinance it because you owed so much more than what it was worth because of all of the changes in the real estate market, and the government buyout program, subsidy program, these HARP and HAMP loans were available to you, and you took advantage of that, know that you actually have two mortgages on your property, and that second mortgage, whatever they agreed to do for you, will have to be paid off when you sell that property. So it's going to make a big difference when you go to do your seller net sheet. When a realtor is doing the seller net sheet for their seller, you need to make sure, and this is where working with doing some research and working with a company that you trust can help you run down some of these things. If you have a question, you think about it, they can actually go in and potentially run down what this mortgage looks like, and so then get a little bit of a jump start before that property goes on the market, or while it's being listed before you actually have a contract, so you can make a reasonable contract between the buyer and the seller, so the seller can actually afford to sell their property. So this second lien or second mortgage is an actual secured instrument that has to be paid and has to be released from the property, and HUD's not going to release it without getting paid off. So just wanted to share you guys, like I said, I like to talk about things that come up. Hey there, Carrie, how are you this morning? Hey, Michelle, how are you? Thank you guys for tuning in this morning. I appreciate it. So if you are doing a real estate transaction and you are selling your property, and this is something that some of these words make sense to you, or maybe make you think about a question that you have, as I've said to you before, please reach out, ask any questions that you might have. Don't be afraid to message me individually. You can email me, Connie at foottetitlegroup.com. Foote has an E on the end. You can go to our website and you can reach out to any of our team members in Maryland or Virginia. They can help you with all of this. This is something that is happening across the country, so it's not specific to Maryland and Virginia. So even though we do closings, are licensed to do closings in Maryland and Virginia, some of the information that we share with you is actually stuff across the country, and this happens to be one of those. So feel free to share or reach out and ask me any questions if you have any. I'd love to help you out with getting to the right spot. If I don't know the answer, getting you in the right direction. Now, lastly, I want to share with you one little thing. As I told you at the beginning of the year, my word for the year is execute. Every single month, we're coming up with a new piece of content to share with you to help you understand more about the home closing process, to help you make yourself empowered to be a little more educated, so that if you have questions, you know these things will spur more questions or hopefully can answer some questions. So starting today, we are actually launching our new piece of content, which is called the 10 FAQs about your home closing. So the 10 most frequently asked questions we come across about home closing. It's going to be on all of our social media running all month. There's an email going out today about it. If you're not on our email list and you want to get on there, message me or go on our website. You'll also be able to get this content on our website, www.foottetitlegroup.com. And hopefully we're helping you out with some information about your home closing. I hope you guys have an awesome Tuesday. I love talking to you on Tuesdays and Thursdays. Coffee with Connie between 8 and 8:30. Hope you have a great day, and I look forward to talking to you again soon. I'm Connie Fuchsa with Foote Title Group, where we protect your home ownership. Have a great day, guys.